Brent crude fell by as much as $3 a barrel on Monday before powering losses, as a breakthrough nuclear deal between world powers and Iran over the weekend led to expectations for an increase in supply.
The oil was as much as $3 lower, back below 110, down to about 108.5 in the on the Brent price, and it's stocks that so the European leisure sector has been boosted on the back of it. The airline stocks are a little bit better. Air France, EasyJet, British Airways have all done well. But I think the companies that seem to have come out of this best, or the ones that are most looking forward to it, are some of the French car manufacturers who did have a bit of a space in this market before the sanctions were put in place. So Peugeot, I think, is up 3%, was up in fact slightly more than that, but up 3% now, and Renault up 1.2%.
Brent was down $1.75 at $109.3 by 2:15 p.m, after dropping to as low as $108.05 earlier in the session. US oil fell $1.25 to $93.59. Tough sanctions against Iran in the past 2 years have slashed exports from the OPEC member by more than a half, keeping Brent above $100 a barrel despite weak global demand.
It's not a free, it's not a free passport to continue business as usual for Iran, but it does help the oil market, because otherwise, going into next year, we still have massive outages, right? Libya's off the market by 1.4 million barrels per day. Iraq's also off the market by 300,000 barrels per day, and on top of that, Iran's also reducing.
The head of the International Atomic Energy Agency said, however, it would be difficult for Iran to revive its oil output to former levels quickly, even if international restrictions on its exports were lifted.